You are a retail investor in Tesla, and you're very active within the X community of Teslarati or Tesla retail investors more broadly, Professor Anderson. But just lay it out for us, as an active investor, talk to us about the goals, the milestones, how you interpret them, as well as being a professor in corporate governance. Are they that hard to achieve for Elon Musk to get what could be up to $1 trillion in pay?
Yeah, well, thank you for having me on. I mean, there's been a lot of talk about how large the potential awards are here, but I think there hasn't been enough talk about how ambitious this plan actually is, requiring Elon Musk to grow this company to 8.5 trillion in market capitalization and 400 billion in EBITDA. So I think, this is ultimately a question of will this company be able to retain Elon Musk, who I think it's fair to say his value has been priced into the shares already quite significantly. It's more than just, in my opinion, more than just a good idea to approve this pay package. It's actually essential for this company to transition to the next stage that's contemplated by the award.
You talk about the 8.5 trillion that they need to reach in terms of market cap, but there's also the milestones, 20 million cars, 10 million on FSD. You've got to see 1 million robots out there, an army that he calls them. But Professor, what's interesting is some have pointed out potential caveats here. They've talked about the board potentially being able to award him perhaps the first 3 tranches of the money promised, if perhaps the milestones were interfered with in some way. Maybe it's disasters, war, maybe it's interference by government, but also just other unspecified circumstances. So does that give you any pause from a corporate governance perspective?
Well, I mean, not really. I mean, it's normal for force majeure type considerations to be taken into account. I mean, somewhat ironically, when ISS recommended a vote against it, it took into account it specified that there was a lack of precision in some of the milestones, but also simultaneously said that the milestones didn't give the board enough discretion in the future to adjust it. So, I think it's a no-win situation in terms of writing a plan like this, because obviously unexpected events can occur that you can't fully anticipate in writing the plan. So I don't think those are particularly problematic. I mean, I think probably the most common criticism I've heard is that the first step of the milestone at $2 trillion market cap, people have said it's too easy to achieve. But I think what that fails to appreciate is that the market has already priced in the fact that it believes this pay package will pass and that Elon will be retained for at least some period of time. So it's priced in his value already. And it's a situation where he's kind of cursed by his own success of, making the milestones easier to achieve because it's already priced in the value of his contribution. So, I sort of feel like some of the criticisms have been a bit unfair in that regard.
Well, some of the criticisms more broadly have been almost reminiscent of what happened in 2018 and the idea that basically corporate governance is lacking because a lot of people on the board are too close to him. How do you think that this pay package in 2025 answered that?
Yeah. So, I mean, the pay package now had the benefit, if you want to call it that, of a completely adjudicated Delaware opinion on that 2018 pay package. So they were able to address just about everything that the chancellor identified in that, including a totally different, having a special committee this time with totally different composition, addressing all the procedural aspects that the chancellor took issue with in the court opinion, as well as producing an extensive report that is more extensive than anything that I recall seeing in recent memory to try to address all those concerns, in addition to, of course, the shareholder vote.
Today we are diving into one of the most extraordinary compensation deals ever proposed. And if there's something so extraordinary, one can assume that it's coming from Elon Musk. Tesla's new pay package for Elon Musk, that's what we're talking about. We're talking about up to $1 trillion US. So how did that happen? What are the conditions? And what does this mean for Tesla, for Elon Musk, and for the shareholders? Let's break it all down.
I want to start by just clarifying some things for our audience. Now that the proxy's filed and the proposed compensation plan is out there, have you continued to be engaged with Tesla's special committee, or was that work finished?
No, we've still been very actively involved with the special committee throughout this whole process. Obviously, that was just the start of it to kind of work with them, but we're working with them ongoing, and they've been engaged with all their advisors and legal advisors along the way.
And since the proxy was filed and shareholders became aware of the terms of the proposed compensation agreement, what is it specifically that you have been talking to the special committee and the board about?
Well, the issues that most people see every single day, a lot of the headlines that come up, and then how can we proactively really address those? And more importantly, it's just really to make sure that it's clear. Obviously, as your viewers certainly saw, the proxy advisors came out and actually commented on the plan and some other aspects as well. And then we just wanted to make sure that the shareholders, not the proxy advisors, were very fully informed about what the plan is and why this is different from what the ISS or Glass Lewis is really reviewing.
So the biggest headline of this week is that Norway's sovereign wealth fund came out and voted no against the proposed pay package. Not an advisory, but an actual shareholder, I believe Tesla's 9th biggest shareholder. And their argument was very simple, that they appreciated the significant value that Mr. Musk has created, but argue that this proposal, the total size of the award is too great, and like the advisory services, they're worried about dilution. Could you respond to that dilution part?
Yeah, well, first, let me just address, obviously, they also opposed the pay plan on the ratification last year as well. So for me, it was a little hard to understand kind of the rhetoric versus the reality, because they've been a shareholder in Tesla since 2011. So right after the IPO, they had a very small position, and they've actually continued to build that position to where they are today. So although they may have some concerns, they've enjoyed the benefit of a
I think it's secondary whether it would be approved or not, but what is Elon Musk exactly proposing? What is being proposed? In early September 2025, Tesla's board filed a plan that could grant Elon Musk up to 423 million performance-based restricted shares, representing roughly 12% of Tesla's current outstanding shares. And the full value, if all the conditions are met, which Elon Musk is proposing that he will meet in some time in the future, then the value of those conditions is approximately $1 trillion, or more precisely, up to $1 trillion in additional Tesla stock awards. And importantly, the award is not guaranteed cash today. It's contingent on a series of very ambitious performance and market milestones over the next decade. Here are the major hurdles that Elon Musk has to overcome to earn the massive sum. The first one is the market capitalization targets. Tesla must grow from its current 1 trillion valuation to about 8.5 trillion valuation. The plan is structured in 12 tranches. The first milestone is $2 trillion cap, then 9 increments of 500 billion each, and finally 2 1 trillion jumps. And also to count, the market value must be sustained according to 30-day and 6 months trailing average period. So this is what Elon Musk is proposing in terms of Tesla's market capitalization targets. And Tesla must deliver a cumulative total of 20 million vehicles within the period and roll out 1 million robo-taxis, vehicle operating without a human driver, and 1 million humanoid robots, achieve certain adjusted earnings before taxes or earnings before interest targets, for example 400 billion over 4 consecutive quarters, and for the last 2 tranches a CEO succession framework must be in place and approved. In other words, Elon Musk must help put in a successor plan. And what's the time horizon for all of this? Elon Musk must remain CEO for the long term, 7.5 years at minimum and 10 years at maximum to realize the full amount. And the bottom line here is, if Tesla fails to hit any of these big targets, Elon Musk will not receive portions or perhaps any of the package. And so one must be curious about why Tesla offered this. Why would such a massive compensation arrangement be put on the table? Tesla's board argues that Elon Musk has singular leadership characteristics and is uniquely positioned to transform Tesla into not just an automaker but a robotic AI powerhouse. It is designed to retain Elon Musk. He has many other interests and companies. The board wants to lock in his leadership throughout the decade. The compensation is structured so that shareholders win first. Elon Musk only gets anything if Tesla achieves the targets, presumably increasing shareholder value in the process. And the board also appears to signal that Tesla isn't just an electric car business, it has to become an AI autonomy robotic business. So the plan reflects that pivot. So this plan has obviously drawn some major criticism from many corporations. And however, this deal has drawn a lot of scrutiny as well, and there are real risks as well. The first one is magnitude and dilution. A payout of up to $1 trillion is unprecedented for anyone. That's why everyone is so curious about it. If it all vests, Elon Musk would own a significantly larger slice of Tesla, increasing concentration of control. And critics say that this may dilute other shareholders. And the next one is the feasibility of these targets. These goals are extremely ambitious, hitting $8.5 trillion market cap, selling millions of robotaxi robots, 20 million vehicles, etc. Some analysts question whether Tesla can even deliver them, but is it really impossible? Because a couple of years before, Nvidia's market cap was 40-50 billion. Now it is 4 to 5 trillion. So it just did 10x in 2 years, but it had a lot of support coming in from the requirement of chips from many AI companies. So what can Tesla do from here? So what can Tesla pull off something so special from here? And the next one is the governance and succession concerns, including a requirement that Elon Musk lay out a successor is a good governance step. But some critics say putting such power in one person is still very risky. And the next one is the other venture distraction. Elon Musk has multiple businesses, SpaceX, XAI, Neuralink. Some worry his attention span may be split. And it is true, when you have many businesses, you cannot just focus on Tesla. And this next one is the approval risk. The plan still needs shareholder approval. Some major investors and advisory firms have voiced opposition. So while the upside is massive, the risk to Tesla, to governance, to execution are real. So what does this mean for Elon Musk in particular? If Elon Musk hits all the targets, his stake in Tesla could grow dramatically. Some estimates say his total ownership value could exceed $2 trillion in Tesla alone. And for Tesla, it signals highest ambition. If Tesla really becomes a dominant robotics AI player, the price could be enormous. But faltering execution could hurt everyone.